Hello and welcome to this Forex Preview at xm.com. We'll be discussing the upcoming U.S. employment report due out on Friday and the outlook for the dollar. I'm Maria Pachurdes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, can you tell us a bit about the debate going on at the moment regarding the strength of the U.S. economy? Is it doing well, or is a recession around the corner? And what are we likely to get from the non-farm payrolls data?
Hello, Maria. With regards to your first question, it really depends on who you ask. So you've got these two camps of investors lately, the pessimists and the optimists. And the pessimists are looking at some leading indicators of economic activity, like new business orders, consumer confidence, housing data, the yield curve, inventories, all of which point to a very sharp slowdown in economic activity being just around the corner. Now, on the other side, you've got optimists like Fed Chairman Powell, who point to the labor market. And they're saying, look at how strong the jobs market is. It's essentially at full employment. The unemployment rate is at a 5-decade low. How can you have a recession when everybody has a job? Now, the problem, of course, with this type of logic, Maria, is that employment is a lagging indicator. When investors look at jobs data, they are looking into the past. They are looking at what happened with the economy, not what's going to happen. In fact, Maria, the labor market always looks to be at its strongest right before a recession hits. It's the last domino to fall every time. So when the Fed bases its decision to continue raising interest rates aggressively on how strong the jobs market is, that could prove to be an error over time, because by the time the jobs data begins to turn and show real weakness, you are probably deep in a recession already. But of course, Maria, this is a conversation for another time. For now, we've got this jobs report. It's expected to be another solid one. So non-farm payrolls are expected at 300,000. That would keep the unemployment rate steady around 3.5%. And wage growth is expected to have cooled a little bit, but nothing dramatic. Now, with regards to the risks around this report, I think that we are more likely to see a disappointment in this data rather than a positive surprise. And I base that on the latest business surveys from S&P Global, which showed that yes, companies still increased their employment numbers, but the increase was the slowest for almost a year because companies are just facing an uncertain environment. They are trying to figure out where the economy is going to be in a few months. Do they really need more staff? And all of this uncertainty has started to take its toll on the labor market. So it's probably too early for any real weakness, but if anything, I think we are more likely to see a slight disappointment in non-farm payrolls.
Turning to the dollar now, what reaction are we expecting, and what's the outlook in the bigger picture?
Well, in case we do get a disappointment, that argues for a negative reaction in the dollar, but I don't think it's going to be enough to change the bigger picture, Maria. So yes, the dollar might take a step back, but it's difficult to argue against the trend. So the dollar is really enjoying the best of all worlds right now, a trifecta of factors, which are a lack of alternatives. You've got the energy crisis in Europe. You've got the Bank of Japan keeping the yen low. You've got sterling trading like a proxy for stock markets that are very volatile. So there is no real alternative to the dollar right now. You've also got safe haven demand with the property sector in China being free fall. You've got some safe haven flows coming into the dollar. And of course, you have interest rate differentials widening in the dollar's favor because the Fed just told us we are going to raise interest rates and keep them high for as long as it takes to crush inflation. So you've got this trifecta of factors. I think that the dollar is likely to remain dominant until something begins to change in this narrative.
Marios, thanks so much. And thanks for joining us at xm.com.